Good morning, everyone. Okay, good morning, everyone, and welcome to the European crossover webinar. We did see the expected tariff announcements for the administration announced. They were announced well after the New York close, but we did go and see an initial dollar pop on that news. And then we kind of gave back a little bit. Then we reassumed ourselves with a little bit further movement in the dollar. And it's been a bit of a mixed bag. You can see here that the euro popped up above 17 after this move here, and just a general pullback, and then we assert ourselves, and then we turn around and we start to slide back. So it's a bit of a mixed bag right now here as far as the move off the tariff. We certainly did see the dollar languish yesterday. That was something that we were expecting. Let's move this out of the way. As we had mentioned, we were looking for the dollar to go in and continue to sell off based on this little pattern that we had. And we mentioned about the 95 being a key resistance area. And that did go in and hold in place actually into the Sunday session, rolling into Monday. And then we just saw a continued deterioration in the dollar. Although it held near its lows, we didn't get, thought we might get the trade news or tariff news during the New York session. We did not get it during the New York session. That came in well afterwards, and then we saw a little bit of a movement in the dollar. Not a whole lot. My thinking is, if you look at this overall, it's the old I'm trying to think of the right word, but there's less reaction each time. It's past the point of diminishing returns. And every time we get this tariff talk, we see this huge move in the dollar. And we saw it here, and then we saw it here. And now they announced the news, and it was just a very tepid response. The dollar did move higher, but it was only slight. And then we ended up losing, we're kind of like edging back a bit. So it looks like, to me, we're just wondering at what point is there going to be a tipping zone for the dollar, and then we really start to make this move lower off of this pattern that we had in place. It really started around Thursday of last week and is basically held true. We were talking about any sells against 95. The only thing that would invalidate that would be a 2-hour close above 95.32, and we have not been able to get that. And since then, we've seen this market continue to go on and rotate lower. And then the news off of the trade line news, you have to wonder, wait a minute, was there actually news? Yeah, there was. we saw a little bit of a move higher, but not a whole lot. So you're starting to see the market's becoming, it's the boy who cried wolf to a certain extent. It's just getting tired of that. It's just not really seeing much movement. That being said, it did go in and take its little bit of a toll on the gold market. We did go in and see here with the gold market that we were, when we talked about that, and we'll get into when we get into the bias chart, but we talked about this yesterday. We said we were on the precipice right here at this key support at 97, and we said that the market needed to get a 2-hour close above 1204 to stop the bleeding, and hence we did. And then we talked about the key 1207 area, and this market got above that, and then as the day went on, we finally started to fade. And then we took a dip down here, which actually came in around, I think it was a 78%. And we've tried to work a little bit higher. If you look here, we've actually reclaimed the 1204 area here. So why these levels are always so important. I'll always, as I mentioned, I always like to look at the body closes on that. So there we go. Just trying to extend this out. And just as I mentioned, a bit of a mixed bag here with the euro. We did move higher, and then we've turned around and eased back a bit. Just really no real sense of, I want to say, in a sense of no direction. a sense of no direction. But once again, that being said, we're above here. I still consider this pattern, as I said yesterday, overall bullish. It was just a matter of how far would it go and pull back. I thought we might be under a little bit more pressure when we came in Monday morning and then work higher. We actually held up overall, and the market just kind of vacillated in a very, very tight range. Overall, I think it's still bullish because I think the dollar is going to have to work lower. That's why. Sterling ended up giving up her cable. Just about made it to that 31.70 area here. Oh, wow. I actually see this. That's exactly where it went to. We did make it up there. Hold on. The high being 31.70. That's our area right there. 31.70. I didn't even know that it did that overnight. There you go, 31.70. Off by half a pip. 31.70.5. That's our intermediate target right here. If you look at the analysis, this is from last week. This was our area here that we were talking about. See what we had our, but our target is, remember, it's 133 with a pause at, oh, there you go. Market attempting to break out a pivot of 36.56, resulting in new bullish momentum. Buy a pullback to 29.73 with trade invalidated if we get a 2-hour close between 29.32, with a target of 33.17, which is 38%, with initial pause, at 31.70. And there's our bias resistance, 31.70. And as you can see, on cable, we made it right there to 31.70.5. But like I said, if you, with the ForexAnalytix, you had access to this, and we were already looking for this move. And that's what we're talking about here, is our resistance was 31.70. I didn't even know that it even made it up there. I haven't done much with the cable over the last week or so. I think early last week I traded a little bit for a move, but nothing a whole lot with cable. So it actually turned out pretty good right there with our, so we've reached our intermediate target, our initial pause at 31.70. We'll have to see how much further back that we get from that. Let's go in and take a quick look at the news as we do. Just a quick overview. News is slide. Australia and New Zealand dollars prove resilient to well-flagged trade risk. You can see here the Aussie dollar trying to still work a little bit higher. Australian and New Zealand dollars took only a brief knock on Tuesday when Washington made good on past threats and announced tariffs on $200 billion of Chinese imports, with the risks so well flagged that losses were fleeting. We just talked about that. The RBA used minutes of its September policy meeting to warn that protectionism was a material risk to an otherwise upbeat outlook to the global and local economies. The bank also welcomed the modest decline in the Aussie, said to be support economic growth. If we're right in thinking that the economy won't live up to the RBA's hopes, then a rate hike may still be 2 years away, he said to Paul Dales, head of Australian economics at Capital Economics. They're a great group. They do excellent analysis, Capital Economics, if you're familiar with them. The Kiwi dollar firmed to 0.2 to 65.91. It had flipped higher when the New Zealand Prime Minister Jacinda Ardern suggested she had been given a hint that domestic data and economic growth this week would be pleasing. The GDP data are due out on Thursday. An economist poll by Reuters predicted a growth of 0.7% in the second quarter for an annual expansion of 2.5%. And on to sterling. Sterling pulls back from 6-week highs ahead of the EU summit. Sterling has rallied around 4% from 2018 lows in mid-August when fears Britain would crash out of the EU without a trade deal spooked investors. Although November was cited as a potential date for a deal, that the reality is there is still a lot more to be discussed and a huge gap between the warring factions of the Tory party, said Joan Foley, FX strategist at Rabobank. Rob said that the government's proposal in the post-Brexit border between the British province of North Ireland and EU member Ireland, one of the thorniest issues in reaching an agreement, was the only credible one. Germany's Spiegel Online reported on Tuesday. While we are GDP bullish ahead of the Salzburg EU unit, we hold back from selling euro pound. Instead, we trade our bullish sterling call against the dollar and China-focused AUD, Morgan Stanley analyst said in a note. And on to the dollar. Dollar falls for a second day as the trade war escalates. The dollar fell for a second consecutive day, and the euro gained on Tuesday after President Trump escalated his trade war with China, imposing 10% tariffs, with Beijing keeping a firm grip on the Chinese renminbi in the aftermath of the latest measures and refusing to let it weaken below a January 2017 low. China's playing a steady hand on the currency front, and the news flow out of Europe continues to be positive, which helps European currencies, said Alvin Tan, currency strategist at Societe Generale. The dollar's knee-jerk reaction has subsided. We just talked about that, and somewhat as some equity markets are managing to rise despite the trade news. It appears that a consensus has already been formed beforehand on what the trade announcement would be, said Shasuke Yamada, currency and equity strategist at Bank of America. Against the euro and the greenback, was up 1/10% to 17.17, while the Swiss franc was trading at 6-month highs against the dollar at 96.05 before a central bank rate decision this week from Switzerland. On technicals, the outlook is cautious for the dollar after it fell below a 100-day moving average for the first time in 6 months overnight, or roughly around the time period when concerns about the trade war hit the spotlight. And some interesting news from BlackRock. I posted this in the ForexAnalytix room. BlackRock, the world's largest asset manager, has moved recently to a long position in Italian bonds. Deputy Chief Investment Officer for Fixed Income said on Tuesday, Scott Teal told reporters the fund had held a short position on Italian bonds earlier this year, then shifted to neutral, and then more recently had gone long on the market. He said Italian bonds were attractively valued compared to Southern European peers. Teal also said he had recently turned more positive on the British pound, seeing its near-term direction as higher. It does appear that the Brexit situation has become more positive, he said, and that a level of 135 was not out of the question. It should appear that Britain would reach an agreement on exiting the European Union next month with a trade deal in place. And lastly, Eurozone periphery bond yields. Italian government bond yields held near flat on Tuesday after tensions between the government officials on 2019 budget appear to reemerge. Financial markets on edge about the government's spending plans. Source said that both Di Maio and Salvini wanted a deficit between 2 and 2.5% to help pay for some main electoral promises, including the introduction of a universal wage. The moves reversed some of the declines triggered in recent days and early on Monday by reports that the economy minister was set on preventing 2019 budget deficit rising above 1.6. The meeting was not a game changer, but it's enough to introduce some two-way risk, said Antoine Bouvet, rate strategist Mizuho. Investors will be asking, do I want to chase a rally now, knowing that a large chunk of the good news has already been priced in? Recent weeks have seen a recovery in sentiment about Italy after top officials said the government would respect European Union rules on fiscal discipline. This would certainly be good news for Euro bulls. The market beholden to headlines. There's a clear tension between the main parties driving these and how they will get there, said Matthew Kames, race strategist at Rabobank. So let's go on and move in now to the bias chart. So let's go and take a look here with the euro. We had a pretty tight resistance yesterday. We weren't sure if we were going to be on the back foot going into the New York session with the announcement of the action or additional tariffs against China. We did get that. After the New York closed, and it had a very limited reaction. We still believe the euro to be positive. We weren't sure if we were going to get further selling, going into the New York session. That actually did not come to be. We'd actually had rallied, and then we ended up holding here. The 1620 ended up being a very good place. We had 1606 as an area where they could potentially pull back to. Although, like I said, we've moved higher. We haven't taken off yet. So I think, the door's still open that they could possibly move higher. But at this point, we certainly have not moved higher. Market's still kind of sticking around and kind of wonder where we're going to go at this point. The Italian situation, once again, it's been relatively good news of late. When we look at where we are as far as support, like I said, I'm kind of curious here. I thought this market could easily have pushed above here, but the trade action is rather limited. Let's take a look at some news also. The only thing we have coming in into the States is going to be Canadian manufacturing sales. That'll be at 8:30 Eastern. And we do have NAHB housing market. So news is fairly limited today. Obviously, we have API oil stocks, but that's going to be after the New York close. So rather a news-free day for the most part as we come into the States. And we already had the announcement of the trade tariffs. So let's take a look where we stand. At this point, you have to think bulls don't really have control. Bears don't have control, but there is a bullish bias, although mildly bullish bias. This was a tough one, I think, here. I think you want to still play the euro from the bullish side. How much further? I guess it's in this sense, bulls have to be a little bit disappointed that we weren't even able to add on to further gains. But once again, I think that the dollar is susceptible. I think we may be in a holding pattern before we can just move higher. So where do we come in? Where's the support? Let's take a look here. I would venture to say right in here, you should see some decent demand. Right there at 1644. 1644. You can see that all the support coming right across here. 1644. Resistance you see this coming. Resistance is actually going to be right there. I'll show you coming across these body touches. See right here? All right, that's going to be resistance. Actually, that's where they ran out of gas right there. 1717, which was today's high. So you can see how significant these closes are, these body closes and opens right there. 1717 is the resistance. Actually, that's where the market ran out of gas this morning. We'll still keep this in a range, although I think this is mildly bullish. Now, moving on to cable. Well, this is it, our intermediate target. If you remember, we've been looking here for a move to 133 And we'll show you on the 38% with a pause at 3170. There's our bias chart resistance at 3170. This is our intermediate target. We're looking for an actual move here on the sterling. We pointed out the analysis, and we're looking for a move to 33.17 to 38%. Okay, but we said there was going to be a pause. We're looking for an initial pause at 3170. Here's our resistance at 3170. And it went to 3170 and half of a pip. So it took out our bias chart resistance and our intermediate target by half a pip. And then we saw a good 50 pip sell-off after that. Right here. Good 50 pip sell-off. So it kind of, we've reached that intermediate target here. We hit it early in the European session. So probably have to go in and pair back at this point. After hitting that intermediate target, we'll keep the 3170 as our intermediate target, which is placed, but we'll probably have to take a bit of a respite, because we've reached that intermediate target. Doesn't mean you go bearish, but after hitting our target is 33.17 to 38%. We'll move this here. There we go. With an intermediate pause at 31.70, and you can see the significance of this level. You see right there, all these touches coming across, hence at 31.70. And our intermediate target. At this point, the market might be open to a little bit of a pause. Thus, let's take a look. We're going to go right there with 30.80. 30.80. I think there's a bevy of support from an intraday basis on the way down, but I think we're going to move that lower here. We're going to actually give it some room in case, because we had such a phenomenal run that if it needs to take a pause, I'm going to go right there with 30.72. 30.72. Because we've had a pretty good run. It's reached our intermediate target, which was 31.70. So a pause would not be unexpected. So we're going to go with 30.72. And we're going to keep our resistance, bias chart resistance from yesterday, which is our intermediate target, which was hit right at the edge or right just before the European session started. Let's go move in now to the Aussie dollar. Now, our resistance was 72.08, and we came up with that right here, right there. Just a hair above that. Come right across here. So give us a 72.08. We hit that. It's starting to respond well despite the trade news or tariff news. So there's a possibility we can move even higher. And that may take place if we start to see the dollar rotate lower, which that's really what I'm expecting. And if we do see that, and it may not, I don't know if it'll materialize today, it may materialize tomorrow, then they're going to shoot for this target, I would believe, which would be 72.55. So The market's so oversold, I don't think you want to get in the way of it. Doesn't mean it's going to take off to Venus, but it certainly has had a nice little rebound here, and I think it's beginning to open itself up to a further correction. If you look at it, look at this. It's got a long ways to go. So getting to 72.55 is not that unreasonable, but certainly that would be the target they'd want to go to initially before you see a bit of a pause. So we're going to give it some room, and so our resistance for the Aussie is going to be 72.55. Obviously, still bearish. Support. We're going to go right there. 71.66 for support. 71.66. And still bearish. And let's go with the Kiwi. Well, we have 66.07, and you can see the market made it to 66.08. So it took out our resistance by 1 pip. And same thing here. I think we're open to moving a little bit higher here, especially if you see this dollar correct. So that worked out so far. But I think that this is where we'd want to go to for our resistance here. It's where the market will target. You can see that level coming right across here. So I'm going to move this here to 66.35 on the resistance as a target initially that they would try and move to. They haven't climbed too much. We may even get beyond that because it doesn't seem that far away. Or actually, if we get a little bit of a dollar pullback, we're actually going to make it right there. 66.59. 66.59 looking out. Although this has worked out, took it out by 1 pip. Still going to be bearish. So as if they do get some good short covering, we start to see the dollar unwind further. That'll be the target for them to go to 66.59 on a short-term basis with support here on the Kiwi. It worked out well, but this is what we'll be looking at. There we go. Support will come in right there. 65.53. 65.53 right there. So just moving that support up just a bit, 10 pips. And with that, we're going to move into the dollar CAD. Now, we did see a little bit of a bounce here in the dollar CAD, and it has certainly relinquished that rally. Let's go and move this into a 2-hour. not put it too much. Hold on. There we go. So we saw a little bit of a pop back here in the 2-hour here on the dollar CAD, but we kind of paired back. I mean, what I'd be looking at if we saw a possibility, someone was asking about that. To me, the optimal area still remains to sell this would be between 31.10 and 31.25. Look like they may get a little bit of a bounce. They started to move higher, and they kind of slid right back below. Kind of in a wait and see. The way I look at the dollar CAD, obviously it's beholding to these NAFTA headlines, and probably a little bit of a kicker on the trade tariff news. But as I mentioned before, I think we're just in a same thing in a sense with the euro, but a little bit more defined as a holding pattern here. But I think certainly has been baked into the cake is that they're going to be looking to go and sell this thing on any rallies. It will take some time for this to resolve itself if it was going to try and move to the upside. I don't really see that happening here, but we're trading in a very, very tight range here. Probably might be probably a better way to look at this market. Probably have to be on a shorter time frame, on a 30-minute if you're looking to try and move in and out during the day. It's not that far. We're trading in such a tight range here, and these are 30-minute bars. You would think they were 5-minute bars. You see a lot of volume coming across here. I'm going to go here with this 30.72 for resistance. If they pop back up there, they may struggle, but it's not that far above these highs here. You know what? We're just going to come across right there, 30.77. Still a ways away, 30.77 for resistance, but I think the dollar CAD's a little bit of a tough one right now to get a good feel on. We did have 30.73 for our daily resistance. This came up short of that. We're going to move it an extra 4 pips. As far as support, you can see the touches coming across. And that's all volume coming across there. And that's going to be 30.05, and we're just going to mark that off as our support for right now, 30.05. Obviously, if the dollar starts to unwind or we see some additional momentum, we could go in and break lower. But we do have an area here that we were looking at that we thought we may eventually get to, and the market held up well, not break into that area, but I thought we might make it down here to the 29.66. So we've held okay. If the dollar rotates lower, the dollar index itself, we could see that move down there. But for right now, barring that, I think we may be at least another 24 hours before that. But for today, would be that 30.05. There's that 29.63 we were talking about. But for today, right now, we're going to keep it relatively tight, 30.05. And with that, let's go and move into the dollar Swissy. We've come off quite a bit here in the dollar Swissy. We actually came into some very key support here. right there. We had 96.16. Mark actually initially found some support there, and since then we've taken a dip, coming right into the 96, and right now we're here at 96.23. Let's take a look at this. We've also come into the 50%. So right now you can see where that body closed and then open right there at 96.05 and a half. We're going to use that as our support, 96.05. But I like this area down here for the dollar Swiss. We can take a look at that on a daily. Right here. You can see this 96.28. Actually, Canadian comes in at 26, but that's the 50%. And that came in this 96.23. We just moved that support level to our support, buy chart support, 96.16, which actually initially held the market. And then obviously we came down here in European trading, pushed it down to 96.05 or 04 before starting to move higher. Actually moved even a little bit lower than that. Got as low as 96.01 and a half. And when we're looking at resistance on the upside, for right now, it's going to be 96.41, initially speaking, but your real volume comes in right there. These touches, it's going to be actually, I'm going to move that up here, 96.54. That's what we're going to go with, 96.54. Before you see some initial, right here you'll see a little bit of a blip, but the actually is going to come in 96.54 on the dollar Swiss on the upside for resistance. Obviously still bearish. There we go. Now it takes us here to the dollar yen, and this has been interesting here with this pair. We actually just about made it up here, this 12.23. We dipped down to 11.66. One of the things that we talked about yesterday, I'm still a doubting Thomas on this dollar yen, but we said as long as they're above the bias pivot, which is 11.66, it's bullish, and the market started to slide back as U.S. equity slid back and bonds recovered. That's one of the things we talked about, is that despite the weakness in bond futures, which would be higher rates, we haven't really seen that translate into significantly higher dollar yen. And then, of course, with equities being so high, as they started to pare back a bit yesterday, that weighed on the dollar yen. And you can see here we made it right back to our bias chart, our bias pivot. Our pivot, and that's 11.66. We talked about the significance of 11.66 coming across, and that's exactly where they found support at, 11.66. We put our bias chart support here at 11.48, but the importance of the 11.66 is, look, I respect the technicals. As long as it stays above 11.66, excuse me, and the low was 11.66 and a half right there. This should actually, this bias pivot should be just a little bit lower. Let's move this down here to reflect that. That's 11.66 right there. So we got to 11.66 and a half pip. And you can see the market rally back on that news. So there's also some news out of Japan in regards to the BOJ. And there was some reference to a story about, whether or not they should start to look at winding things down. But the talk was, if we do that, then it could really make the market, throw the market in a bit of a tizzy. Did see some news here. Italy's 5-year government bond yield falls to the lowest since July 27th. So things continue to look a little bit better here for Italy. But once again, as long as it's above that. But that being said, I still have question marks here on the dollar yen. But certainly the comments regarding the BOJ are certainly supportive for the dollar yen in the sense that they weigh on the yen. So I'm still going to stick with this 12.23. Not going to go in and change that. We did make it up to 12.30. But I like that 12.23. Now, looking at it from a technical standpoint, you see where this body close was? That comes in right there, 12.20. Well, there it is, 12.22.5. There's our 12.23. That's exactly where the resistance is. So that stays the same. We're going to keep it 12.23 for resistance. I'm a bit of a doubting Thomas on this dollar yen, but we said as long as it stays above the bias pivot of 11.66, then have to respect the technicals, although I just don't really believe in this market at this point, but it has come back. But if you look at it, one of the things I looked at yesterday with the euro is, if you look on this bar, it's essentially gone 50 back on the bar. And generally what I like to do is you see a big bar like that, I'll go from the actual bar, not the range, on one specific bar. So we take a look at this. Actually gone a little bit further than 50 back on the bar. The actual bar right there. Just beyond. Actually going the wrong way, but still going to be the same. Still doing it the wrong way. There we go. There's 50 back on the bar. So we got past that, so I'll give it that. So maybe just about 61%, but because generally if you see a big bar like this, which really that's a engulfing, although for some people they want to engulf the entire range, as long as it engulfs the body, it was just right there with the body and look for 50 back, but we'll see what happens on this. But I got a big question mark here on this dollar yen, but certainly the comments coming out in regards to the BOJ certainly did go on and provide some support here for the dollar yen. So for me, no changes, 11.48 and 12.23 on the dollar yen. So let's move into the cash dollar index. We'll see gold starting to move up higher again. Well, to me, it's still the same thing. No changes here for the buck. Obviously, suspect or held hostage by the news. But to me, it's all about this bar chart, this formation right here. And what I did was I just took this same line, moved it lower, and that gives me 92.80. And from a little bit longer term perspective, that's what I think the market is going to go to or correct back to, 92.80. Whether it does or doesn't, we'll find out, but I'm thinking 92.80. And with a pause at 93.72. But the market's staying stubbornly high. But as I mentioned earlier about past the point of diminishing returns, that's what we're getting right now, I feel, on all this trade news. It used to be every time they talk the trade news, we'd get some big old fat dollar rally or a pretty good sizable rally. And we saw that the 2 Fridays ago, and we saw that last Friday. And now they announced the tariffs. And boy, we got like about a 20 pip rally, if that much. And now we're kind of like just barely hanging on. So it's just, you know, even if you're bullish, you're thinking, wow, what happened? You know, what happened to my rally? Shouldn't I be getting a rally? Didn't they announce the tariff news? So we're starting to, you know, the market's just starting to become immune to that, this whole tariff news. And how many more tariffs can you announce? I mean, the market's just getting a little bit tired of it. It's just losing its effect, becoming immune to it. So I think we're susceptible. I'm not sure if it'll happen today. It may happen today. But I think the dollar we may finally start to see a good slip, whether it's today or tomorrow. We'll see. In the meantime, I'm going to stay with, in case we get a move here. And that's at 95.02. Nothing's really changed on the dollar index. We said that yesterday. I like the idea of selling the dollar. And the only thing that's going to invalidate this is a 2-hour close above 95.32. That would invalidate it. It doesn't make it bullish, but it would invalidate the move at that point. If not, I still see from an intermediate term, I'll move to eventually, potentially a move to 92.80 with a pause at 93.72. So no changes there. And support, I'm just going to look at 94.27 for an intermediate support. We could slip, so let's take a little bit further look because we're much closer to this now. Just one moment. You know, we may get a pause at 24.7 for this now. If we do slide, I want to go with this 94.09 because I do think it's susceptible. So I want to go with move this support down to 94.09. Certainly, gold's acting like it wants to move higher based on what's going on here with the dollar. And what I've been noticing lately, or last day and a half, is gold seems to be, I don't want to say front-running the dollar, but front-running expectations of a dollar move. So now it looks like gold's acting like, oh, I bet this dollar is going to slide further. That's how, I mean, the way I look at it. But I want to move the support down to 94.09. There we go. It's still got to respect the technicals, just like we said, dollar yen. So overall, the market's been bullish, but for right now, it's in a range. You see that? We're going to have to break much slower before we could say, okay, now it's starting to turn bearish on a very short-term intermediate type basis. Now let's go and move into the gold market. One of the things we talked about yesterday when we came on, remember, we said we were, and we showed that on our analysis here in the ForexAnalytix. And we said we're on the precipice of key support. 97 on the horizontal support, 97 on the trend line support. And it was going to be make or break here. I was saying I still liked it overall from a longer term move, but certainly the bulls have been put on defensive on Thursday's action, which rolled into further pressure on Friday. And that took us into where we were Sunday evening, Monday morning. And we've responded. We were talking about that it would need to get a 2-hour close above 12.04 to stop the bleeding. We did get that. And then we said the next key area was 12.07. That was the daily breakout area. And certainly they actually made it up to 960, but eventually they did go in and fade into this, made it all the way down here to 78% of this move. I'll show you. Gold loves to trade on the technicals. You see that? Exactly to the 78% before sharp retracement back. But don't forget, one of the things it had already done is it had held against this 1197, and we had gotten past the 1204. So anyone that was bearish on a short-term basis would have to respect that and say, okay, you know what? Let me, I can't be short until we get another break beyond that. So you can see they defended that, and then we're actually moving higher, and we're actually above 1207 right now. So for right now, for support, at this point, we're going to go with 1203. Let's move it $1 below this key, 1204, give it a little bit of a room. So support right now will be 1203. We're able to move this up. And for resistance, well, if the wheels fall off the caboose for gold, I mean for the dollar, and that's a possibility, but I think sometime within the next day or two, we should see the dollar start to break lower. Because as I mentioned before, is we're getting to a point where the market's now becoming immune. And we had good reactions on this. I'm going to throw this many tariffs on there. Okay, another rally in the dollar. I'm going to throw more tariffs on China. Okay, another rally. And now the announcement, and like the market just moved like about 20 pips. So now the market's like, you know what, I'm immune to that. You know, next. So you have, I'm saying that's how the market's reacting. So if you've been bullish, or the market's been bullish, and it has now broken out of this pattern, and it's opening the door for, at least in my opinion, it's opening the door for a move. Then at this point, then the market traders get you get this initial break, okay, and then we get this rally, and we're like, okay, well, once they make this announcement, the risk is really that they're going to really start to move up in here. But that didn't take place. We got the actual news. And you can see here, I'll give you an example. Let's move here. Look, I'm going to announce a bunch of tariffs on China. Nice rally. I'm going to announce a bunch of China on rally. Okay, decent, okay, not as strong, but pretty good close. Here's the announcement. Whoa, dude, where's my rally? So you've already broken below here, and they make the announcements, and you get like what, a 20 tick rally? So my point is that we've already broken below, and so anybody that's bullish is saying, wow, I'm not getting any more rallies, and now we're actually starting to weaken. And I think you can start to hit some stops, and that'll open the door for us to move lower. Our initial, I'm looking for a eventual move down here to 92.80, but I am looking for a pause at around 93.72. So I'm thinking we can still break another 50 to 70 pips right here before we start to see some, maybe a little bit of covering. So you can see it's already continued to weaken. Euro, look at that. Euro's now above 117. And gold, as I mentioned, it seems to be front running. You see here? And look at this nice wick right here, this hammer. Right it hit, the market went to the 78% of this move here. Yesterday's we knew we had to defend 1197. So 1197 to 1209.60 went right to the 78% with a nice strong hammer. It's really opening the door for a move higher. And to me, it appears like gold seems to be front running what it believes is a move in the dollar. And certainly, like I said, anyone who's bullish the dollar has to have been disappointed after that Chinese tariff news. And you got about a 20 to 25 tick rally. As I said, the old movie, Dude, Where's My Car? Dude, Where's My Rally? So on the upside for gold, resistance, it's got to be this key area here, 1213, right there. Actually, probably even a little bit higher, because if we blast past 1209.60, and the dollar starts falling apart here, it's going to be right there at 1215. That'll be the resistance, 1215. It's got to give it that room here. It's already front running the dollar to a certain extent. Not front running, but front running in the sense of expectations. There's our 1207 yesterday. We mentioned as key, the daily breakout. So be wary, don't get in the way of gold, especially if this dollar starts to come apart. And the same thing with the euro. The euro is certainly acting like it wants to move higher. And we could start to see some liquidation of these long dollar positions, because the market is just not responding any more positively to the news. And which, we thought announcing $200 billion in tariffs. I mean, where's the rally? You know, the old saying, the old move saying from the 80s or whatever, where's the beef? 30-year bond. Well, we're still languishing near the lows, which is one of my concerns about the dollar yen. It seems like the dollar yen ought to be in better shape. We had 41.05. The low here was it 41.06 or 7? 41.07. So we're going to keep the 41.05, and I want to keep this 42.02 also. And we're just about the end of the show. Let's go move into the bunds. Well, we had 58.84, and that was actually the low tick yesterday, 58.84. And that just happened to be a level that we saw there. So I think we're pretty well overdone here. So we're going to actually move that support to right here. You see these touches coming across this on a 30-minute chart. So it's going to be 58.95. We'll let it take it out by a tick if it does. So we'll go 58.94. Resistance. Right there. $59.29. That's resistance. Let's take a look here with the DAX. Actually, I don't know if we're going to make it up to this high. We actually made it right into this level here. Resistance is just going to come in right there at this body. 12,166. You can see that. 12,166. And we're actually looking at this on a 30-minute. Let's see if we can find something here. Nothing per se I can see. Any significance? This market is so beat up. We are holding that 12,105. We're back above it. So here's the key right there. It's going to be just below. Right there. That's going to be key for it to hold. 12,050. I think we're in a safe area. We're holding the 12,105. We're actually just going to give it just a little bit of room. We'll say 12,087 in case they take a stab just below that. But it needs to hold that. It actually comes in right there. I'll show you. It really needs to hold this area. If not, we just rotate lower. It's going to be 12,083. 12,083. It'll be just a second. And there's the bias chart. And that takes us to the top of the hour. And if you want to go and print that out, we're all set for the day.
Hey, Paul.
Hey, Blake, how you doing?
Good morning.
Hey, good morning.
Man, I'm trying to make 2 cents of what's happening, and just as you were talking about the dollar is going to weaken, I don't know, about a half an hour ago, the euro dollar screamed back up. The dollar did come under some pressure. One of the things that you were talking about is, with all these, with all these new tariffs, why hasn't the dollar responded? I think right now, one of the reasons why the dollar hasn't responded is we haven't seen a response from China yet. So, you got people that are like, okay, well, is China even going to respond? Are they going to do a tit for tat? Type of retaliation. I was talking to a friend of mine who is, was looking at gold, and he's like, I think one of the reasons why gold is stronger is because China is going to have to stimulate their economy. They're going to have to, do some sort of stimulation efforts, which is going to be inflationary. So, and with rates going higher, that makes sense. The question is, what do you do with the dollar here? I'm not too sure at the moment what to do with the dollar, because I think we're still range bound. You got the euro dollar pushing up against 117, but does it have enough oomph to push through? And if China does respond, sometime today, will we get a North America response, and will it be dollar positive? That's, because if China comes back and has some sort of retaliatory rhetoric, the dollar could get a boost off of some risk aversion. So it's a tough call right now. I think one of the reasons why you've got the dollar weaker at the moment is just because of the lack of response at this point. But at any moment, China could some headlines could hit regarding China and what they want to do, and I don't know. I don't know if you really want to be short the dollar if they do that. If that makes any sense.
I mean, the way I look at it. And I was pointing out, last Thursday we saw this formation. I was asking about you, and I was thinking, to me, it looks like it's bearish. And one of the things I looked at is whenever the administration has announced tariffs or talks about tariffs, we always see a pretty good rally. And this is a rally that we saw 2 Fridays ago, strong dollar rally going into the close. And last Friday we saw another good rally, a decent, okay rally into the close. And then now we get the announcements of the tariffs, and we get a 25 tick rally. But we're already below here. So traders that have been bullish the dollar, they're staking, well, I'm still doing okay. But now with this formation, to me, they're starting to say, well, wait a minute, maybe things are I'll wait for the next rally and I'll see how that looks like. And it reminds me of that movie from the 90s, Dude, Where's My Car? Well, you know what, dude, where's my rally? You know what I mean? Now we get the announcement of $200 billion worth of additional tariffs, and we get a 20 to 25 tick rally. So that's what I'm saying. Dude, where's my rally? And we're already in a bearish. To me, it looks like it's a bearish setup for the dollar. So I think that we could slip. Another thing that you were looking at, and I did post that in the ForexAnalytix room, and I mentioned it here, which is an ancillary issue. You mentioned about the Italian situation. It says BlackRock Teal says they've moved to a long position in Italian bonds. They've been short Italian bonds, and they went to neutral, and now they're long Italian bonds. And they also like the cable. But now the cable actually reached our intermediate target to the pip. Our intermediate target was 3170 in the ForexAnalytix room. We're looking for 133 with an intermediate pause at 3170. Today we hit 131.70 and a half. But to me, I just feel that the dollar, I don't think it's horrible, but I think that we just need a little bit of a correction. And that's not asking for too much for this market to go in and break lower. So I think that people may start to unwind their positions a little bit. And for the last couple of days, it seems like gold's been I was going to say, and not front running the dollar, but front running expectations of the dollar. So it certainly started to move higher, but we defended that 1197, and we're kind of holding here. But I think in the next day or two, we can start to see the dollar unwind a little bit further. We'll see what happens, but that's my take on that. I think China's just sitting back and saying, you know what, why are we going to respond tit for tat? We're just going to sit back and we'll wait, and we'll just figure out what's the best move for us to do. So I think maybe they're not going to react so immediately. They may just sit back for a couple of days, and they'll do what they think is in their own best interest, and probably feel that the best thing is no reaction for right now, and then they'll move from there. Whichever way that may be, I don't know, but I kind of believe that I think that the safer bet is actually to sell the dollar.
Yeah, and yeah, I'm not. Again, I'm a little indifferent right at this moment in time. I picked up I picked up the dollar Canadian again just because it's holding up relatively well. You know, and you know, I'm kind of nibbling on the dollar in certain spots, but yeah, I don't know. It's a tough call. Hey, Paul, do you mind doing me a favor? Can you cover just for a couple minutes? I have to run and deal with my dogs just for like just a couple more minutes. Maybe cover like the
sure.
Maybe like some of the indices that you don't, or maybe
that's exactly what I was going to go and look into, which is on the S&Ps.
Yeah, give me just a couple minutes.
Yeah, sure. One of the things that was my concern here, and we've mentioned this as a touch just yesterday. Generally, my longer term outlook is a 2-hour chart. And the reason I like the 2-hour versus the 4-hour, because with the 2-hour, you get, 12 different bars in a single day versus, less than half of that. So 6. And one of the things I was looking at, I ended up moving this to 480 minutes just to get a little bit better perspective. And one of the things that I looked at was it appeared that we had a hanging man, because we saw this rally going into the close on Friday. And to me, it's like, well, that just looks like a hanging man, and we may just start to see a little bit further pressure. And certainly that's exactly what we saw. We saw further pressure. Matter of fact, you look now here, you're seeing a little bit of a hammer. But to me, this market is going to have to move above this 2908. And really, to me, it looks like any type of resistance is going to be right in here to 2902 to 2904. But when I look here, I think that the market it's still holding up very well. But my concern has been here with the equities, and the same thing with the dollar yen is how long are you going to be able to hold? Not that I think it's bearish when you've got yields at these high levels. When we look at the 30-year bond, look at that. I mean, obviously it makes good sense that it's going to be higher rates because the economy has done better, way better. When this is going all the way back to 2014, where we're still having to take care of the economy, and little by little, the economy has been able to pick up into as employment and economic statistics has done very, very well. And so there's been a less need, obviously high rates, because the Fed has already started to take action. But at what point does the indices take a bit of a pause, and does it get negatively impacted from what we're seeing with the tariff wars? Seen a lot of people talk about, and a lot of business leaders say this is just not good. So you have to go in and wonder, but we're holding up very well so far. But that's my take here with the dollar yen, is that my concern is that if that's the case, we should be a whole heck of a lot higher. The dollar yen had already started to break lower a little bit into the U.S. After U.S. Open and further. We did get some comments out of Japan in regards to the Bank of Japan, and there was some talk about when would they look at about normalizing or adjusting, and we got a little bit of a boost here because they were saying, well, if we were to start to talk like that, it could really throw the market into a tizzy. So, well, I don't know about that, but that certainly did go on and help the market to come back. The market basically ran out of gas close to the same area, which has been our bias chart resistance since yesterday of 1223. But we are starting to see a little bit of weakness in the Nasdaq. Certainly, things are still bullish, but once again, like I said, we may see this momentum start to pare back, and I think that you want to go and keep an eye. One of the things that I looked at, and we were calling, I'd like to go and touch a little bit on news, just for a little bit of a flavor or perspective. And one of the analysts, I can't think of his name, with FCT International, was saying, look, gold's not going to be able to move. We don't have a catalyst, barring a pullback in U.S. equities. So right now, gold seems to be treading water. It was able to defend this 1197. I think this has a lot to do with where the dollars. My concern is with the dollars. Just be careful. I don't think the dollar is going to heck in a handbasket, but you can, I believe, start to see some long liquidation. And don't forget, the market is incredibly long dollars. A lot of people have also referenced this as a potential head and shoulders right in here. And I think that just to slide back, even if it was just to the neckline, at the very least, we're taking 94.09, depending on what you see as a neckline, 94.09. I just think that we're susceptible for some liquidation of long positions. And with some additional momentum, that may end up pushing us down here closer to the lower 93. So just be wary of that. My thinking is that the euro may end up getting pushed up by default. And certainly the concerns with Italian bonds is starting to wane a bit. Not saying they're completely out of the woods, but it's starting to wane a bit. So we'll see how that goes and plays out.
Hey,
this.
Paul,
Holding up.
Oh, I just want to say I'm back. Thank you so much for covering me.
Sure.
Me.
Okay.
Yeah. So I'll go ahead and take over from here. And is there anything else that you wanted to cover really quick?
No, just as I said, when you look at the S&Ps, one of the things I mentioned there, but I usually don't look at anything beyond a 2-hour, but I looked at this 480-minute just for perspective. And you can see here that when we rallied into Friday, we had this hanging man, and that opened the door for this lower move here. And I was already sharing that yesterday, and certainly we did go on and see this lower move, but I'm just wondering, I don't think that the equities are in bad shape, but we are starting to lose a little bit of momentum. And once again, my only concern is that the market is incredibly long dollars, and we could just see some liquidation. Nothing huge, but that should be enough to give us a little bit of a push and maybe push us out of this tight ranges that you, me, and Stelios and a couple other people were talking about yesterday in the meeting. But I'll let you take it over from here and see what comments you have, because I know we're in these tight ranges with the market overall, and see what you want to reference to. But have a good day.
You too, Paul. Thank you very much. All right, traders, this is Blake Morrow, and you were listening to the FACE webinar, and that was Paul Franco. And just so you guys know, Dale is still out. He is we did hear from him yesterday. We're just letting him recover because, you know, pneumonia is no laughing matter at all. You know, my wife, she had it a couple of years back, and we had to take her to the emergency room twice. And she's not a person that gets sick easily, so it definitely is something you got to monitor carefully, and you got to recover. And so he is recovering. Hopefully, he'll be back this week or possibly next Monday. I think that would be at the latest, but he might join us towards the end of the week, which would be nice, but we're letting him move at his own pace. So for that reason, I'm covering here for him, and then we obviously have Steven Stelios coming in as well. Now we've seen a lot of movements in the FX space over the last 24 hours. The first one, the reason why you saw the dollar yen sell off here is this was in response to the new round of tariffs that the U.S. is imposing on China. One of the reasons, well, one of the things that turned the dollar yen higher is that and Japan actually announced that they're going to initiate and start bilateral agreements or trade talks, with the U.S. That moved the dollar yen higher, and then we saw the spike in in European trade, early European trade. We saw the U.S. dollar, Japanese yen take out the stops above this 112.20 level, which, that whacked the stops. And now we're just, we're back testing those areas, but are we going to be able to continue to push higher? I'm really not too sure. I think the market, you can tell this is a stop loss run. I mean, we rallied above 112.20 and then slammed all the way back down to 111, 111.80 and change. And then, we've obviously bounced back as US traders have just been stepping into the fold. I'm unsure what to do with like the dollar yen right at this moment and all these other yen pairs, because you can see that the euro yen, for example, broke the 200-day moving average. But we are, struggling to build on those gains, because what happened is we had that rally, that squeeze, then we're right over here. We're right back below or right at the breakout point. And I think a move below 130.50 would signal that we are going to make a move lower in the euro yen. And then that would just, for me, cement the idea that this was just a short squeeze, just got all the shorts out, and then we start moving lower. But I think that's going to have to move with equities. And right now, equities, they're strong. I mean, we've bounced back in the S&P. You can see this is a 4-hour chart. We've bounced back. We are now, if you just take as Paul was doing, and I'm gonna give you a little bit longer term perspective of the S&P right now. We're actually making lower highs. Yesterday's move cemented the idea that we're making lower highs at this point. Now, we're not making lower lows, but in the event, at this stage in the game, in the event that you break below 28.60, that is a near-term change in trend. So if you got the S&P here, you got high, lower high, you've got a low. In the event that we come back and we break through these lows, now we have lower highs and lower lows that will eventually potentially lead us to a little bit more of a down move, I guess is what I'm trying to say. But we haven't broken that series of lower high or lower lows just yet, not yet. But it's now becoming a risk. The trade war is intensifying any which way you slice it. And like I said, I was talking to a friend of mine, and a really, really great trader. And he was just like, yeah, China could try to stimulate their economy. But remember, their economy is actually the economic data for China is already in a weakened state. So they may try to do some sort of stimulus measures. But are they going to retaliate? And I think if they do retaliate, then that's going to give us a new leg lower in the S&P. And that's what's going to put us, at the support, if not lower. And that's something that I think is a risk for the stock market. Now, the question that we have as currency traders is what's the response, and how does the market respond? I mean, the euro, look at this, look at the whipping around we're seeing in the euro dollar, for example. We were just trading at 116.80, then we traded up to 117, almost 117.10, right back down to 116.90. It's extremely volatile right now in the currency market, and you have to be a little careful trying to chase, because the euro, if you ask me, is actually consolidating in this range. I know Paulie said that the dollar looks weak, and I would agree with that if the euro takes out these highs. We have this downtrend line right here that you can see this false breakout right there, potentially another false breakout. And that's why that I think we have to be a little careful while we're trading around this 117 level. And obviously, and I'm just going to point out, I'll be Captain Obvious right now. Obviously, a move below, let me draw that out a little bit better. A move below like 116.50, that's going to be a pretty negative event for the euro. are we going to get there? Are we going to break it? I don't know. I think you have to, yeah, at this point, you have to let the market show its itself, rather, or show its intentions, rather than assuming which way it's going to go. So I guess we can say, above 117.30 is bullish, and below 116.50 is bearish. And until we make a break one way or the other, you have to be really, really careful. And I think that's the just the fact of the matter right now. We're wedging really tight, and a breakout is probably imminent. And heaven forbid you're stuck on the wrong side of a breakout too. You know what I mean? So I think you got to just let the market do what it's going to do versus you making an assumption what it's going to do. The pound, Paulie made a really great call yesterday at it's 117, or I'm sorry, 131.70. And we are kind of in between fibs here, but you can see how we're holding this uptrend line, very minor. But I think a break below 131 would probably, signal that we're seeing a, near-term reversal in the cable. So we just got to pay kind of close attention to that. And speaking of, actually, if you want to just dismiss like a lot of the dollar pairs, if you go look at the euro pound, we are bouncing actually off a pretty key support. And if you break below, and I have this drawn out, this arrow here, because if you drop below this 161% extension, you're breaking this uptrend line too. But we are actually respecting it right now, which you need to think about that too, is if you are long the pound. If you're long the pound and you got the euro pound that's bouncing, if we get a more significant bounce in the euro pound, that is going to weigh on the cable, so to speak. So just something that I think everybody should be paying attention to if you're dealing with the pound dollar at the moment. I was going to take a real quick look, and I know Steve probably wants to look at this with Stelios as well, but I got to look at it too. There's gold and here's silver. I mean, it's hard for me to see for me to be really bullish gold and really bullish silver. But until we break above, like in this case, gold has to get above 12.15. Silver has to get above 14.35, and then at that point I'm going to be extremely bullish gold and silver. But I'm saying this because this is what's really going to turn me bearish to the dollar. This is what, if I see gold and silver break higher, and that's really what's going to show me the way. It's not because it might not be so obvious when you're looking at the dollars. With the dollar pairs, it may be more obvious if you're just looking at precious metals, and then precious metals make the move, and that will give you the confidence that the dollar is going to move one way or the other. And in this case, I'd have to see silver and gold actually break out to the upside before getting really, bearish the dollar, or in other words, along the euro or along the cable, or maybe along the Aussie, that type of thing. One of the other things that Paulie pointed out this morning, early on, like, about an hour ago, is about how the Aussie is actually outperforming right now. And the Aussie is actually outperforming despite this ongoing trade war that we have with China. And that is significant. What is that telling us? Is it telling us that we should be long Aussies? I don't know if being long the Aussie is necessarily the right trade, but it is something that you kind of got to keep in your in the back of your mind right now, that the Aussie is actually doing a little bit better. In the event that risk appetite continues to improve, or maybe there's some improvement between China and U.S., that that the trade war doesn't escalate from here. If it doesn't, maybe the Aussie is, the better play to the long side. And it doesn't necessarily mean you have to buy the Aussie dollar. It might be, shorting the euro Aussie or shorting the pound Aussie. This way you're playing the Aussie dollar, but you're doing it on a cross rate, or maybe even buying the Aussie yen. So those are things that I think that we should be, thinking about moving forward, just because the Aussie is doing a little bit better at this point in time. Doesn't mean it's gonna sustain, but it is something that's an observation that's worth noting, in my opinion. Okay, and what else I want to go over? The dollar Swiss. The dollar Swiss is at this major confluence here. I actually picked up some dollar Swiss this morning because I've got a long pattern in play, actually, and so I played it long yesterday, made a little bit of money. I played it. I'm buying it again down here. We hit the 161% extension of this range. It's also at a big long-term 50% retracement, and if we get above 96.30, it's going to break higher, in my opinion. And with the dollar yen moving higher, and with yields moving higher, I think it's possible that the dollar Swiss actually gets some sort of bounce. And this is where we get those mixed signals on, okay, are we going long the dollar, or are we going short the dollar? Because there may be some dollar pairs that perform better than others, like the dollar yen and maybe the dollar Swiss versus the euro or the pound. So those are just other things to just to keep in mind as you're trying to navigate through this very difficult market. With that being said, I'm going to pass everything over to my colleagues Steve and Stelios. Guys, are you here?
Hello.
No,
Hey, good morning. Actually, before I pass it over to you guys, I need to mention that our offer is live on ForexAnalytix, and let me explain to you guys how this works. The ForexAnalytix, we have a subscription offer that we do maybe once a year. And we only do it for a week or two. In this case, it's going to go all the way to the end of this month. So it's going to be all the way till September 30th. As October 1st, we will shut it down, as we always do. It's a very special offer because it's a buy 1 month, get 1 month free, or you buy 4 months, get 2 free. So it's a semi-annual subscription, or buy 8 months and you get 4 months free, which is basically an annual subscription. It's the best deal that we offer. And we don't extend the offer. We just shut it down, and then you guys can't get it for another year or whatever. So if you want to be part of the ForexAnalytix community, make sure you take advantage of it. And also, I need to mention that Paul Franco's webinar that you guys are listening to, the European crossover right now, it is a free webinar until the end of this month. And the end of this month, it will be a subscription only webinar. So if you want to get the morning analysis from Paul Franco, only people in the ForexAnalytix community are going to be able to get that. And because Paul is really good at reading price action, and we want to make it exclusive for our subscribers. So that's all I wanted to mention about that. And make sure that you visit Forest Park FX. I don't know if you guys don't get some sort of rebates in your trading, why you wouldn't. So talk to them, and you can get to them right from our reimbursement program link. They are our sponsor of this webinar. That you get this free webinar because of them. So make sure you go down and visit them right here. They have the email address and Skype account where you can contact them directly and kind of see what your options are for your the type of trading that you do. So guys and gals, make sure you sign up for the new seasonal offer. And Steve, Stelios, it's all yours.
Thank you, Blake. I am going to take over because Steve is restarting his router or something. And, yeah, the usual problems. It's okay.
Passing it over to you, man.
Sure.
All right. You guys have a good one, and have a great day of trading.
Thank you, Blake. See you later.
Thanks, guys. Bye-bye.
So, a couple of things I wanted to mention before we start. First of all, if you don't mind, Steve. First of all, the Trump and the U.S. tariffs on China. There is a little detail which I don't think we mentioned, is that Trump has actually said or hinted that there are more tariffs to come if the Chinese retaliate. So if they retaliate with any kind of measures or anything like that, I remember reading that there was around 260 or something like that billion of extra tariffs. So that's the thing to keep a note of, because not only is he introducing tariffs, but he's kind of threatening. If you do something in return, then I'm going to just increase them. So that's one thing. The other thing, which I find once again surprising, is that equities don't care about anything. I'm sure you guys, I think Paul
U.S. equities.
U.S. equities, yes. And it's like you have this thing, over our heads, waiting to see what's going to happen. And U.S. equities are happily green again today. So, this is something that I don't get. I'm not short equities, but I'm not long either. So I'm just watching them with interest. And the other thing I want to mention, actually, which is I think the funny thing of the day, is that the Kingdom of Saudi Arabia said that they are they are actually comfortable with prices above $80 per barrel for crude.
Why wouldn't they be?
Yeah, I was thinking, okay, give me one scenario where they're not comfortable. They're producers, they're the biggest producers. So I read that and I chuckled. But yeah, I mean, they're gonna say that they have a vested interest for prices to be high. Their product is finite. Eventually, it's going to be over. So they probably want to sell it for the best possible price.
As every employee is comfortable with getting a raise. I haven't heard anybody complain about it.
Yeah, exactly. So, otherwise, not much happened, overnight. I mean, obviously, the Trump story and the tariffs is the main thing, and we wait to see what's going to happen with that. And NAFTA, we had nothing from there. Brexit, nothing there. Nothing from Italy. So, the world is good otherwise, apparently. And
indeed,
that's that's pretty much it from my side.
Okay, great. You can pass me the screen so we can have a look at a few technicals. Obviously, not much has been happening. We've been so far after returning from summer trading. We've had more or less very tedious market conditions. Like it or not, it is what it is. My prediction is that this is not something that's going to go on for much longer. I expect that sooner rather than later, this is going to change, and I think we're going to get some volatility and some good volumes, and usually those two bring with them technical clarity. Now, there are a few things that I feel stronger about. Let me start by saying I was mentioning that since last week that I think that the USD yen is going to break higher, and I said yesterday specifically that I believe that we have extra evidence for that due to the fact that finally we got. Let me switch to it. We finally got the Nikkei breaking out from the 23,000 level, and actually the Nikkei earlier today even gave, during the Asian session, even gave people the opportunity to join in at a very good price, because it came down. It was negative at some point during the night, and it came down and retested this breakout horizontal support resistance area at 23,000. It actually went to 23,050, but as always, I mark areas, not a specific level. And as you see, it accelerated higher following that. So I do believe that, this is, I had been saying that any breakout either from 22,000 or 23,000 should be respected. We're seeing this upside. Just look at the momentum we've had since we found this low here in what was it, like 19th of September, 7th of September. Yeah, and, we've had like a very, very healthy move to the upside. As I said, we even now retested the breakout area. So I think that we're on our way to 24,185, which was the high, and we take it from there. Very likely a new high from there. So the Nikkei and the US equities don't seem to care that much about anything else. Now, oppositely, from what happens to other indices, although Stelios, since you mentioned the Shanghai Composite Index like a few days ago, and we were, looking at this potential of a, descending wedge, I have to say that, we got a very nice bullish engulfing overnight, and quite a nice reaction. Not exactly what somebody would be expecting, following the news about the confirmation about the tariffs. We're also seeing some very nice RSI divergence on the daily chart, because the higher the time frame, the more reliable the signal. So as you see, quite a nice divergence as well in the RSI. So I have to say that even if we have a look at the Shanghai Composite Index, there is a decent potential for a rebound from here. Obviously, the Nasdaq has had a very negative day. I scalped some of it yesterday, which isn't my style, but after getting that kind of a candle, I was just 1/4 of a position short. I took it out because I still don't trust these markets. So that was some fast, easy profit, and I just took it out of the market because the S&P still looks to me like it's consolidating. I mean, just looking at the S&P, which anyhow is the risk barometer having to do with especially US stocks, it doesn't look bearish to me yet. And today's hammer is a testament to that. I would at least need to see a break below 28.62, 63 to expect a deeper pullback, perhaps towards this ascending channel support. For the time being, we have to respect the fact that we are in an uptrend. Now, having to do with euro and crude and how do I connect them? I do and I don't at the same time. I see an inverted head and shoulders here potential for the Euro USD. I've said plenty of times, I do believe that the vast majority of the chances are that we're going to, in the short term, break higher. I would want to see this 50% fib at 1930. The 200 DMA is just above that and converging to that level. I would want to see it getting retested. So in the short term, I'm still looking, for higher prices in the Euro USD. Of course, there's no guarantee. We need to see a breakout from this, like roughly 117 area, a daily close above this 117 area. And at the same time, crude is doing its best. You mentioned what was the trigger, Stelio, a statement that has no value at all because, the market rallying on a statement that Saudi Arabia would be okay with higher prices. As I said, it's like stating the obvious. It's like saying that, the sun is hot. Regardless, I do see this as a potential in inverted head and shoulders formation as well. I mean, you can see it quite clearly here. And, since I still maintain my medium to long-term bullish bias, as I was saying, I do see a potential for one more leg lower. But one thing is for sure, if we finally break above this high, I then think that this probability goes out of the window and we have more or less a confirmation that, the uptrend has resumed, in which case this very nice inverted head and shoulders formation, having broken the neckline, once that happens, once we see daily close above the 61.8, just above 71, I think that's going to be pointing to new highs. My next target would probably be the 61.8% fib of the big bearish move that we had until we actually found that low, roughly at 25, whatever it was, which comes at 76.50. So, that's where I have my eyes at the moment. 70, 71, quite a strong resistance area. Actually, we haven't managed to close on a daily closing basis above the 70 resistance area. It's a little area like 30, 40 cents. So, I want to see, first of all, that happening. And, once that happens, then I'm going to be looking for more upside. And I might actually even buy crude. So, this is something that if it happens, if we see euro, finally closing above 117, if we see crude finally closing above 70, even preferably above 71, I think that at the same time we should be seeing, and I'm more or less saying that, the opposite thing than Blake was saying. I mean, no, sorry, it's not the opposite. It's actually the same thing, but I'm reversing a little bit the order. I mean, Blake said, I want to see gold, move higher, break higher. What I'm saying is that I believe that euro and crude might actually be the ones driving the move. It might be gold, who knows? But probably, when one of them at least starts breaking out, I think that the rest of them will do. Now, I don't know if it's going to be Euro USD first, very likely in my opinion. I don't know if it's going to be gold. I don't know if it's going to be crude. But in my opinion, those things should happen in sequence or concurrently, but very close to each other. So, these are the markets I'm actually monitoring for some kind of confirmation that, we are headed higher and that the dollar is actually headed lower, which, from a technical perspective, looks very likely to me. Let's switch back to the dollar. Dollar, as you see, like barely holding, but, it's definitely very heavy, right? Definitely very heavy. And, also, and not surprisingly, we see something like an inverted head and shoulders formation in the euro, like a head and shoulders formation in the DXY. So, all of them should happen more or less at the same time. And this is what I'm monitoring. And I do believe that once we get that ball rolling, I do believe that we're going to get some more clarity and, some better and cleaner moves in the markets, or at least, that's what I'm hoping for. And I really don't believe that we're going to easily finish September in the same manner that we've actually gone through it. I mean, having choppy, tedious markets. I do believe that, the market is going to start moving. Now, I don't know if there's going to be some kind of a catalyst first. Obviously, the extra sanctions didn't end up providing that catalyst for the time being, but it might be something else. Sometimes it's nothing at all. It's just, the market just decides that, okay, it's time, to get rolling. And, that's when it starts happening. Now, having to do with some of the yen. Okay, first, let me go through some of the commodity currencies. I have to say that, the Aussie is making a decent attempt to reverse, but, it still remains within this descending channel. So it has, room to go, but you don't even need to go down to a 4-hour chart. You can see that this also looks like an inverted head and shoulders formation. I mean, little shoulder here, head, little shoulder there. So, and the same thing applies to Aussie yen, actually. Let's have a look at the Aussie yen. There you go. Shoulder, head, shoulder, Aussie yen, after a very unimpressive breakdown. I mean, we broke down from this consolidation, but, the downside momentum was very, very unimpressive. And this is something that was actually troubling me. Actually, I worked with a fund. They asked me about the Aussie yen some time ago. I said that, because they had a recommendation to sell it, actually, I said that, listen, I have no argument against selling it. But on the other hand, I'm not really enthusiastic about the way it's moving lower. I would want to see, something more impulsive. On the other hand, the Kiwi yen actually is threatening with a double bottom, right? Because we retested this confluence of supports at 72.37, and we're rebounding again from there. For me, critical level is here, the 74.30, previous low 50, the 50 DMA is also there. A little bit higher, we have the descending. You can see this descending channel. It's been going on for quite some time. So, for the time being, the commodity currencies look more or less better than the rest, in the short term. So, I'm monitoring that as well. They need to do more, to actually prove that something is happening, because yes, they are rebounding, but have they actually cleared yet any of the strong levels you would want to see before you can actually, call this like a reversal? Not yet. But, they do show some potential. So there is also a couple of more things I wanted to show before we go through questions. Euro yen actually overnight tested quite a nice area of resistance, previous support. You can see it here. I was looking for resistance either in this zone or a little bit higher at the 61.8. If we get a rejection, in either of those levels, I'm going to feel good about, a move lower, you know, a resumption of the move lower. But to be honest, I don't see yet. I mean, we did stall a little bit overnight there, but I don't yet see the signs, you know, that of a reversal. You know, as I said, those are levels of interest. So, you know, we might get something manifesting. But, you know, just by going through the two currency pairs that we can build the synthetic euro yen from, I mean, the euro USD and the USD yen, you know, neither of those two. I mean, if I had to do something with them, I would buy actually both of them in the short term. So, you know, having said that, this is a key technical level, but do I really feel that it's going to do something? No, actually, not really. So, you know, I'm monitoring this level, but I'm going to be a little bit surprised if it acts as resistance already. Same thing with the pound yen here. I mean, we're retesting this 147.50 area. Initially, I was expecting this level actually to, after we tested, because that's exactly what I was looking for, like an ABC. I was expecting that after we retested this level, the pair might fail, and it still might do. I mean, we're exactly here. But, you know, the cable is still in corrective mode. The USD yen has broken higher. So, you know, I'm a little bit skeptical. Let's see what's going to happen. Definitely, I wouldn't be buying it right on resistance. That one thing is certain. So, you know, important level. I'm really looking forward to see how the end of the day candle is going to look like. And, you know, we can discuss about that tomorrow once again. Now, let's have a look at the crosses, and then we can go through some of the questions, because yesterday I didn't actually do that, the pound Aussie and the pound Kiwi. And one of the reasons it's important to do that today is because so far today, for example, the pound Aussie is threatening with a key reversal, right? We actually pushed to new highs, and now we're reversing, and we are actually threatening of closing below yesterday's low. So far, quite a bearish candle. Of course, we need to wait for the daily close. We had already started seeing strong signs of bullish momentum loss. So the bullish momentum was waning. But today here is the pound Kiwi as well. Not a key reversal, but already an outside day. You know, looks to me more like a bullish consolidation if we actually close near the highs. But if we actually push and close at the lows, you know, that's going to be a little bit of a warning signal. Pound Aussie looks better if you want to trade the reversal in comparison to pound Kiwi. There's no question about it. The reason is that for the time being, the Aussie Kiwi is actually managing to hold the ascending channel. Let me show you before we go to the equivalent euro crosses. So, you know, we had a big outside bullish candle in the Aussie Kiwi overnight. As you can see, we held this channel support once again. So as long as we hold this channel, there is always the chance. I mean, we should respect the possibility that the Aussie is going to overperform the Kiwi. So let's have a look at the Euro Aussie and the Euro Kiwi. So here it is, so far a spinning top, more or less a candle that shows indecision. You know, I have to remain bullish as long as we're staying above 161.50. Okay, so 161.50 remains, you know, a key level. And, you know, Euro Kiwi, probably the most bullish of those pairs. I mean, from the Euro and pound crosses. Simply put, this looks like a short-term flag, pennant, you can call it whatever you want. So, you know, if you want to be long one of them, I think that Euro Kiwi looks the best. The next upside target I would be looking for would be the 161.8% extension of this corrective move lower, which comes at 180.73. I think that it's quite likely that we are going to tag that level. So let's see. Stelio,
yes.
Do we have any questions?
We have one from our friend Costas, he's saying, have a look at copper because it's breaking out, has a big engulfing candle.
Oh yeah, thank you for reminding me. I was looking at it earlier. Copper, an amazing head fake. Yesterday, after the announcement of the news, I was actually one of the first things I looked at in my screens was copper, because copper was actually, as you see, threatening with a breakdown from this triangle. It was pushing the lows, and I was thinking to myself that, if we actually get some follow through from that, we are really on our way to the next target, which is roughly at 243. And, now it has completely reversed course. We're trading at the highs, and we seem to be breaking out from this descending trend line resistance. So we were actually threatening with a breakdown, and now we're threatening with a break higher. Now, what would I need to confirm? A daily close above 273. If we do see a daily close above 273, I think that's going to be a nice head fake. And I think we're on our way to 294, okay, which was a breakdown level of the double top. So copper is quite interesting. I think it might have trapped a lot of people in the wrong side of the market overnight. And, if we close above that level that I said, 274, I think that the market can easily move another 20 cents to the upside. And perhaps, some of the weak bears will actually fuel the rally themselves. Any other questions, Taylor?
Let me have a look. We have Sterling Swissy. Do you feel like having a look at that?
Sure, absolutely. Why not? I don't even remember when's the last time I looked at it, but yeah. As it seems, it wasn't that long ago. Okay, this is a very bearish breakdown, and you can see why. Right? Because, let me put it on auto so you can see, strong move lower, a move that has 100% corrective characteristics. It's exactly what we would expect. I mean, overlapping, choppy, slow, took a long time to retrace, like a little bit more than 50%. We even got this little nice overthrow, which I bet got a lot of people trapped in the wrong direction. And then we reversed and finally broke below this channel. So, I think it doesn't look good at all. In the short term, it looks like it might want to post like an inverted head and shoulders formation, but we definitely need a break above 127.30 to confirm. In which case we might get like a stronger rebound. But in any case, I would be looking to sell, rebounds and not the opposite, right? Because this is a very bearish development. So, as I said, rebound might actually extend even towards 128.30, 127.20, 127.30, strong resistance. If we break above that, we might extend higher towards 128.30 to 123.60, this zone. But I do think it's a pair that should be sold on rallies and not the opposite. Let's have a look at pound CAD. And because I forgot to mention those in EuroCAD as well, pound CAD pushing higher, currently testing almost a confluence of resistances. I mean, the descending channel is a little bit higher, but we're definitely now testing horizontal support resistance area. So quite a key area here. I would be very closely monitoring it. If we do break above this area, I do believe that we should see more upside. And let's have a look at the EuroCAD as well. There it is, EuroCAD. As you see, got rejected from this confluence of resistances, the 200 daily moving average, and this horizontal support resistance area. But, for the time being, I don't have anything against, seeing a stronger rebound. Most probably, I would expect something like this to unfold. So I would expect at least one more leg to the upside, okay, to play out here. Now, let me mention USD NOK, because actually USD NOK did break down below the 820 area. So I do believe that this is a more complex move to the downside, in which case I would be looking for 820 to act as resistance from this point on. So bottom line, I don't think that the move lower is done with USD NOK, and I do believe that selling a rally to 820 or perhaps even to 831 at the worst case scenario here, these lows that were formed at 831 roughly, is the best way to go. Doesn't look like the USD NOK is ready to break out from that long-term formation that I was also showing yesterday once again on the weekly chart. So we should probably be looking to sell rallies from this point on. I don't believe that it's going to completely break down, because as I was showing, this is a longer-term consolidation. So it has more room to move to the downside if it needs, but I really don't see yet the technical elements of like a big breakdown, but it definitely has more room to move lower. So Stelio, is there any new question that has come up? Otherwise, we can just wrap it up.
Yes. Yeah, maybe. Okay, we have one more question. Our friend Chetan is asking for the Dow, Nasdaq, and DAX. So, do you mind? Have you looked at Nasdaq recently?
Yeah, I looked at it before. Actually, I traded it yesterday.
Today? Sorry. Okay.
Here it is. No, I didn't specific. I mean, I showed it. I didn't say much because we're still holding like these previous lows. I see us trading below this important trend line, but what troubles me is that usually when you see like a big trend line, and this was a big trend line, I mean, it was a trend line that was actually supporting the uptrend for quite some time. It had been tested multiple times, and every single time it proved that it is important. But now that we're actually trading below it, the market seems not to care about it. So this troubles me somewhat. I would expect a totally different kind of price action once we saw that. Regardless, with yesterday's candle, we formed an evening star formation in the Nasdaq. So I have to say that despite having closed my small position and took profit yesterday, I have to admit that if I had to do something with it, I would be selling it once again, right? Hesitantly, and I might actually do it now that we've rebounded somewhat. I don't know. I'm going to think about it. It's a quarter of a position, so I might reestablish it. We're going to see. I still see the potential for a bigger breakdown in the Nasdaq. I just don't like the fact that we haven't accumulated some momentum. That's what I expected when we actually were breaking this trend line. Now, having to do with the Dow is probably the least interesting of all the indices. I mean, first of all, it's the one that hasn't been pushing to new highs. So, it has been underperforming more or less. And, it's like nearing the all-time highs. It's above this triangle. There's not much to say about it. I would either trade, I think, better patterns to trade in the S&P and the Nasdaq. IWM yesterday had quite a bad day, but it has yet to break down even from this previous triangles resistance. Let's see, we might retest it today, confluencing with the 50 DMA as well. So let's first see it break that trend line before we can have a bigger discussion. Definitely, though, it was very, very overbought. It was very, very near a critical confluence of resistances. We didn't actually make it there, but we came, rather close to that. So I wouldn't be buying it yet, although the move lower for the time being definitely doesn't have impulsive characteristics. One thing is for sure, if we're talking about indices, as I was showing yesterday and last week, I think that if you have to be long one of the indices, that has to be the Nikkei. Because clearly the Nikkei has broken out just recently from an important formation, and it seems to have the required momentum to make you feel comfortable that this is a technical break that the market actually trusts at the moment. So Thank you all very much. As Blake mentioned, our offer is up until at the end of this month. It's a great opportunity to get, your subscription at a deep discount, and you afterwards you're also grandfathered in, so you can stay on that program forever. So it's you have a few days to grab this offer, but whenever it auto renews, it will do with existing prices. So that's it for today, and we'll see you all again tomorrow. Thank you, Stelios.
Thank you, Steve. Bye-bye, everybody.